Ford's electric vehicle goals have run into significant obstacles. In the first quarter of 2024, they encountered a staggering loss of $132,000 per EV sold. What led to this, and what does it mean for Ford's future in the EV market? This year started on a tough note for Ford, with a reported loss of $1.3 billion in the first 3 months. To break it down, that's $132,000 in losses for each of the 10,000 electric vehicles sold during this period. So, why the disappointing figures? Like many car makers, Ford is pivoting towards electric vehicles. However, they're the only traditional automaker providing a detailed breakdown of EV sales performance, and the numbers aren't exactly encouraging. What went wrong? Ford's EV segment, Model E, saw a 20% drop in sales compared to last year, generating about $100 million in revenue. While that sounds substantial, it's actually an 84% decrease. One factor in this downturn is the ongoing price cuts in the EV market, which have squeezed Ford's margins. This contributed to their $1.3 billion loss before accounting for interest and taxes. Additionally, Ford isn't just losing money on sales. They're also heavily investing in research and development for future EV models. Ford has a plan, aiming to reach a point where EV sales cover production costs without relying on massive R&D expenses. But it's not going to be easy. The ongoing price war in the EV sector is a significant challenge. Even after reducing costs by $5,000 per Mustang Mach-E, Ford's revenue from sales is falling faster than they can keep up. So, what's the takeaway? Ford faces tough hurdles on the path to EV profitability, but they're not backing down. In an effort to boost sales, especially for the F-150 Lightning, Ford has introduced steep discounts. And it seems to be paying off, at least for the Mustang Mach-E. Looking back at 2023, Ford's Model E division suffered a $4.7 billion loss for the year, selling 116,000 EVs, equating to a loss of $4,525 per vehicle. However, it's not all bad news for Ford's electric efforts. Their Ford Pro unit, which focuses on sales to businesses and government entities, is performing well. For instance, they secured large orders from the U.S. Postal Service for 9 250 E-Transit vans, and from Ecolab for over 1,000 F-150 Lightning pickups and Mustang Mach-E SUVs. While Model E struggles, Ford Pro's success offers a silver lining for the company. Ford's leadership remains optimistic about their EV future, with plans for next-gen models they believe will be profitable soon. On the internal combustion engine side, Ford Pro delivered impressive results, earning $3 billion in EBIT, more than double last year's figure, and increasing revenue by 36% to $18 billion, selling 409,000 vehicles. But it's not all smooth sailing. Ford Blue, which handles gasoline-powered vehicles for consumers, saw an 11% drop in sales to 626,000 vehicles, with revenue falling by 13% to $21 billion. EBIT also took a hit, dropping by nearly 2/3 to $905 million. Comparing profits from Ford Blue and Ford Pro shows they're keeping pace with last year's performance. But the losses from Model E dragged down overall net income by 20% to $1.3 billion. Despite this, Ford managed adjusted earnings per share of 49 cents, which, although down 21% from last year, exceeded analyst expectations. Looking at the competition, General Motors aims to turn a profit on its North American EV business later this year, while Stellantis is already seeing profits in Europe. Tesla also had a challenging quarter, with a 48% drop in adjusted earnings and a 9% revenue decline. Ford's stock isn't at an all-time high, but there's potential for growth, especially with attractive dividends. While their EV segment may take time to turn a profit, investing in Ford stock now could pay off in the long run. If you found this video helpful, please like and subscribe to stay updated with our latest content. See you next time.